What's up guys, welcome back to the vlog. Today we're going to be talking about the tech stock sell-off that's going on at the moment. Why is it happening? Why could it be really bullish for Bitcoin and cryptocurrency later in the year? It's quite a counterintuitive thing that's going on. Last year when the real economy was really crashing because of COVID and all the lockdowns going on, the stock market actually started to soar and do really well. And you saw a lot in the media what's going on. There's this massive disconnect between the stock market and the real market and the real economy, but there was a lot of good reasons why that was happening. And now it seems really counterintuitive that just as the real economy is starting to look positive, the vaccines are really helping, lockdowns are starting to open, so it looks like things may be starting to improve and grow and go back to normal, and now the stock market is starting to crash. So what's going on there? Why is that happening? So let's break it down. So a lot of this has to do with interest rates, and what's happening this year is to do with inflation. So last year what happened was we had the initial panic from the stock market sell-off. There was a lot of uncertainty with COVID. No one knew what was going to happen. Was everyone going to lose their jobs? Was the epidemic going to cause half the population to die? There was a lot of worry. People didn't know what was going to happen. So a lot of people pulled their money out of the stock market. I mean, that's quite clear and obvious. Prices crashed. But soon after that, when we started to understand COVID a little better and what was going on, people started to panic a little bit less. They kind of knew what the situation was. They knew that we could get a vaccine. It was kind of a waiting game. And what happened was a lot of the central governments around the world started to lower interest rates and come out with huge stimuluses. I mean, we're talking trillions and trillions of dollars pumped into the economy that's just printed out of nowhere. In fact, one of the craziest stats from the last year is that 40% of all US dollars currently in circulation were printed in the last year. Now think how crazy that is. Almost half of US dollars are literally being created in the last year. That shows how much money is being created and put into the economy. So, for a start, a lot of that money that's been printed finds its way back into the stock market, which helps to raise prices. But another thing that happened that was very significant was that a lot of central banks, such as the Fed, lowered interest rates. So interest rates basically dropped to zero. Now, what does that mean? Now, interest rates are basically the borrowing rate set by the central bank. So it basically makes it really cheap to borrow money. So when interest rates go to zero, companies and individuals can basically borrow money for free, which is amazing for business. So that's been very bullish and positive in the last year, the stimulus and the lowering of interest rates. So what's going on this year then? Why are tech stocks crashing now? Well, people are scared of inflation. So the economy is opening quicker than expected, it's recovering quicker than expected. The vaccines are being really effective, which means soon everyone's going to go out and all of this money they've saved, all of this stimulus that's been printed is going to start finding its way into the economy through people spending and buying. If inflation rises, the Fed will eventually have to step in. So, a lot of central banks aim for a healthy amount of inflation, which is around 2%. A lot of countries aim for. But when you start to go much over that, it gets unhealthy because it devalues money. The Fed will have to step in. And how do they control inflation? They raise interest rates, which makes it more expensive to borrow money. So the Fed have come out, Jerome Powell, the chair of the Fed, have come out just last week and said, don't worry, we're not going to raise we're not going to raise interest rates for a long time. There might be a bit of inflation coming up, but don't worry, there's still a lot of damage to the economy. It's going to take a long time for that to recover. And while the economy is damaged, we need to keep interest rates low. So he tried his best to reassure investors, but investors aren't quite believing him at the moment, and you can see that with what's going on in the stock market. So why not? Well, it all comes to do with bonds and bond yields. So bond yields crashed last year because everyone bought into them. So when the stock market crashed last year, people panicked, they pulled their money out of stocks and they put it into bonds because it was a lot safer and more secure. You can't lose your money in bonds as long as you buy safe bonds. So the yield went way down. It basically made bonds very expensive. So you couldn't make much on them, but people weren't worried because they wanted the safety. What's happening now is people have this fear of inflation. So people don't want bonds anymore. A bond yield on a 10-year treasury bond is about 1.5% at the moment. But if inflation is 3 or 4%, you're effectively losing 2.5% of your money every year. And because everyone's pulling their money out of bonds, it causes the bond yield to rise. So bonds get cheaper. So it makes them a lot more desirable because you can get a much higher percentage. So that's what's going on. It's people aren't listening to the Fed. They're panicking because they're looking at this rising Treasury bond yield and thinking that, oh God, inflation's coming in. It doesn't matter what the Fed say. They're going to stop printing money. They're going to raise interest rates, and it's going to be really bad for the stock market and for businesses. And the reason it's hitting tech stocks the worst is that a lot of blue chip, big kind of traditional value companies, they make really good money. They have great cash flows right now. They're undervalued, and because of what's happened, and you know, they're generating good money. So they're a desirable asset to have right now as the economy recovers. A lot of these tech and growth stocks have had crazy growth over the last year because people were wanting to buy into them because this interest rate was so low. It's all to do with discounted cash flows. So because it's cheap to borrow, it basically effectively people are pricing in that they're going to grow even quicker, and they're going to make more money in the future from them, so they buy them now. But as interest rates rise, it really damages their future cash flows because it's harder for them to borrow money now, and it means what money you invest in these growth companies will be worth less in the future. So people are selling out of these growth and tech stocks, and you know, it's a market rotation into the value kind of recovery plays, you know, things like oil and gas and airlines and hospitality and things that have been damaged. So at the moment you'll see there's not a whole market sell-off, it's just a rotation from stock into that, but sometimes that can cause the whole market to sell off. No one knows what's going to happen right now. There could be a 10 or 20% correction. Because of everything that's happened, it's very unlikely that we're going to have a massive market crash that's going to last for a long time. I think this is probably just a short correction, a short sell-off, a healthy kind of reset of some of the values that we're getting out of hand, and it's likely that, you know, within a few weeks things will settle down, the bond yield will settle down, and the stocks will start raising again. So why is all this so positive for Bitcoin and cryptocurrency? Well, Bitcoin is a hedge against inflation. Bitcoin has a finite fixed supply, and you can never add any more Bitcoin. On top of that, you have the halving cycle, which happens every 4 years, which limits the amount of new Bitcoin that can be mined. So basically constrains the supply each day. So because of that, it's a deflationary currency. It can't have inflation. So a lot of people see it as a hedge against the inflation and all the rampant money printing that's going on in the economies right now around the world. So that's why if inflation starts going up, Bitcoin's going to be something that people are going to flock to take their money out of US dollars and out of companies and put it into something that's hedged. So that's, you know, a really positive thing for Bitcoin if inflation comes out. If it doesn't, Bitcoin's still seen as a bit of a speculative asset by a lot of people. It's very volatile, it has high growth, and so if the market carries on growing and being really bullish, no matter what happens, it's positive for Bitcoin and cryptocurrency. Now, it's a risky asset, and there's a lot of things that could happen. It's very early in its adoption cycle. Don't just go and invest in it without doing some proper research. I'm not a financial advisor, so don't just take my word for it. But I'm very bullish on Bitcoin, and there's many reasons why. And I'll be making some more videos talking about different reasons why Bitcoin's good. So there you go, guys. I hope you found that useful. If you found value in that, please, if you could hit that like button, I'd really appreciate it. It will help me to continue making these videos. I'll be back soon with another one. Have a great week.